Welcome to the Eldercare channel. My name is Stephanie. I'm the marketing director for Horizon Elder Law, as well as today's host for the Contra Costa County Eldercare channel. Today I'm here with reverse mortgage advisor Rick San Vicente. There are lots of misconceptions when it comes to reverse mortgages. Rick is the best guy to help clear those up. Horizon Elder Law has worked with Rick for over 5 years, and we've seen firsthand that the client comes first with Rick. He will be the first one to tell you if a reverse mortgage is not appropriate for you or your loved one. Rick has a passion for people here in our community, as well as some others less fortunate. Rick, can you share with us a little bit about your spring break?
Oh, we go to beautiful downtown Tijuana. Actually, not downtown Tijuana. You go into downtown Tijuana and you go up about 45 minutes into the hills. And our church goes down there every spring break for the last, I don't know, a bunch of years, but I've only been going about 5. And we build houses. I remember the first year my daughter wanted to go, and we're going to edit all this news about what's going on down there. And I speak Spanish, and I'm afraid, and I'm imagining in my head, cyclone. They kept saying it was safe, but I wasn't too sure, right? So they had cyclone fences, is what I was thinking, with razor wire, guarded by guys with machine guns. I'm just imagining all this stuff. So I said, if you're going to go down there, sweetie, I'm going to go with you the first time. So I went down there, and it was amazing. It was amazing. I mean, I saw my daughter grow up a lot down there. I saw a lot of kids grow up a lot down there. They work hard. The kids work hard. And there's some amazing relationships that develop down there, and it's all service. I mean, these kids, for the most part, have never worked so hard before in their life. I mean, and the old guys like me, we're having a hell of a time too, because we're on our knees. There's no power tools, there's no mixers, so you're pouring those bags of cement, pouring that foundation that first day. Everybody's got a bad back. I don't care how old you are, you got a bad back. But it was great. Good food, good all that. We built probably 15 homes this time. We started out a few years ago with only 5. We had 200 teenagers, and I think we brought them all back. We didn't leave any behind.
Oh, that's good.
Yeah. And it's always a tearjerker, the key ceremony, when you hand over the keys to the family, and the kids are there. The mom always starts to cry first. Then the kid starts to cry. Then the dad starts to cry. And then I don't care who you are, everybody in there is crying, and all the kids. So they remember that. So yeah, it's a good thing, and it's nice to see, they're working that vacation instead of other things they could be doing.
Oh, that's great. I too have a passion for the less fortunate, and I've been to Haiti in 2010, and I got to do similar work in an orphanage, and it was so life-changing. It was amazing. Well, thanks for sharing.
Yeah.
Going back to reverse mortgages, I've heard a lot of rumors that banks will take your house if you get a reverse mortgage. Can you tell us the truth about the reverse mortgage industry?
Yeah, that's probably the biggest misconception. If you do a reverse mortgage, you've given up your house. I mean, I've even had clients tell me, hey, Rick, I'm ready for reverse. I'm ready to give up my house. And I'm like, okay, we'll help you, but the good news is I don't have to take your house. Where reverse mortgage, it's just like a regular mortgage. When you have a regular traditional mortgage, you go to the bank, you ask for money, and the bank says, how much money do you make? What's your debt ratios? What's your ability to make a payment? Okay, so you have a house, maybe it's worth about this much, and you get a mortgage of about this much. You make your monthly payments, okay, and every month you make those payments. Hopefully that balance goes down over time. With a reverse mortgage, we don't really care about your debt ratios, credit scores, and income as much. It's mostly age-based, so we look at, you don't make a monthly mortgage payment. So maybe you have a line of credit, maybe you have monthly payments, maybe you need in-home care, whatever it is, that money, whatever money it is that you borrow, you don't make payments on. So what happens to the lien on the property? It grows. That's all. That's the difference. It's a growing lien versus a non-growing lien. And there's protections in there. If you owe way too much in the house, the heirs aren't responsible for the difference as long as they do their job immediately after mom passes away. But whether it's a traditional mortgage or a reverse mortgage, it's just a lien on the property so the bank can protect their position. So, because it's still your house. You still have to make property taxes. You have to keep making, the homeowner's insurance, and you still got to keep the house in livable condition. As long as you do those things, you'll be okay. So, the bank doesn't take the house. Everybody thinks that. And so our biggest issue is education.
Right.
As long as, the borrower gets educated, that's all we really care.
Mm-hmm.
If they decide the reverse mortgage is not right for them, that's fine.
Mm-hmm.
They just need to not listen to all the other street stuff and get educated.
Right. Well, great. Thanks. That clears the air. There's a lot of talk about fees in obtaining a reverse mortgage. How much does it actually cost to do a reverse mortgage?
That's a little bit more complicated question than about a year ago.
Okay.
FHA and HUD have made a lot of changes to the program in the last year. Some of us are even calling it the new reverse mortgage, but it depends. Oh, sorry.
Start over. Let me ask the question again.
Okay.
There's a lot of talk about fees for obtaining a reverse mortgage. How much does it actually cost to do this?
That question is different now than maybe a year ago. HUD FHA has made a lot of changes to the program over the last year or so, constantly improving the program, putting in more safeguards for not only the borrower, but also for the FHA fund to make sure it's going to be integrous for the long period. So if you're only borrowing a line of credit and you don't know anything in your house or you owe very little and it's just a line of credit, it's a lot less expensive than it used to be.
Mm-hmm.
I don't want to go into details because then I have to get into disclosures and all that other stuff right now. But if you owe a lot more money and you have a big mortgage you got to pay off, HUD's going to charge you a little bit more. You'll get a little bit less than a couple of years ago. But fundamentally, there's choices.
Mm-hmm.
And you get presented with all the choices, and we'll talk about which ones may or may not make the most sense. But ultimately, it's an FHA loan. So if anybody has ever done a traditional HUD FHA forward loan, you'll see the FHA reverse loan very similar.
Okay. What are the common uses for a reverse mortgage?
The most common, years ago, the average age of a reverse mortgage was 75 years old for the borrower to do a reverse. We're seeing that number continue to go down.
Mm-hmm.
So the borrowers are getting younger and younger and younger. If they're 62, which is the youngest you can be to do a reverse mortgage, the common situation we're seeing is they have a big mortgage and they're trying to retire and they can't because the mortgage is suffocating them, the monthly payment. So getting rid of that monthly mortgage payment on the mortgage they have right now is probably what we see at 62.
Mm-hmm.
As they get older, usually they need income. Maybe it's a way to get a little bit extra income, and it's loan proceeds, not earned income, so there's tax advantages to that. Then a lot of times, especially what you see and hear, is the adult children are trying to take care of mom and dad. Mom and dad want to stay home. Maybe they didn't buy long-term care. Maybe the in-home care is costing a lot more than it used to, and they don't know how to pay for it. Mm-hmm. So the line of credit is frequent for that.
Mm-hmm.
And then for financial planners, we're seeing the line of credit and the reverse mortgage for home purchase.
Mm-hmm.
Two new programs that are coming into play that are helping retirement plans last longer. That's what FHA wants to see.
Mm-hmm.
And so instituting this a lot of times will help a retirement plan last an extra 8 to 10 years. So there's a lot of uses now.
That's great.
So those are some of the ones.
Yeah, that's great. And yeah, it does come in handy, especially when people are running out of money and they don't have the extra income to pay for care. Dealing with seniors, that's what we see the most here. Yeah, thanks for sharing. Well, is there anything else that you wanted to add?
No, just I think the most important thing is don't get scared because you hear the word reverse. Get educated. There's counseling anyway, so everything that I tell you, you're going to be able to bounce off a HUD FHA counselor and get confirmation on. But the most important thing is find out what your options are, get educated, understand them, and then take your time to make your decision. But at least get educated, because there's nothing worse than realizing you could have done something and you didn't.
Yeah.
And at least dissuade. That's all I would pretty much say.
I would agree with that. That's great advice. Thank you.
Sure.
Well, thanks for your time, Rick. If you'd like to learn more about reverse mortgages, or if you'd like to contact Rick, he can be reached at 925-848-6575. Thank you so much for visiting the Eldercare channel. We hope you have a wonderful day. Thanks, Rick.
Okay.